audit. Audit is an independent examination and expression of opinion on the financial statement of an appointed auditor in pursuance of that appointment and in compliance with any relevant statutory requirements. Next, I will explain about objective of auditing. Auditing has two objectives. The first objective is primary objective. Primary objective is to form and express an independent expert opinion based on the audit work performed that the financial statement of an organization which are to be relied upon by the users are free from material misstatement. The terms that are used are true and fair value, present fairly in all respects, and reasonable assurance. Secondary objective. Secondary objective is to form and express an opinion on compliance with statutory requirements and other regulations. Besides that, it is used to provide assistance to the clients in improving financial controls and financial reporting within the business. Auditing is also used to detect and prevent fraud and error in accounting records.
Next, we will go to the differences between accounting and auditing. An accountant always keeps track of every financial transaction of an organization, while an auditor focuses on examining financial statements and transactional records to check whether the financial statements are equitably presented or not. And accountants provide financial management information necessary for effective decision-making in the organization. And auditors are not involved in any financial management of an organization. Besides that, at the end of every financial year, an accountant should produce all financial statements of an organization. An auditor will review the work of accountant on the quarterly or annual basis. An accountant will always maintain financial security by following internal controls. An auditor maintains internal control system by updating audit programs, questionnaires, and also recommends new policies and procedures. An accountant prepares special financial reports by collecting, analyzing, and summarizing account information and trends. An auditor will prepare special audit and control reports by collecting, analyzing, and summarizing operating information and trends. As per money, for an accountant, the minimum salary of an accountant is $42,140, where highest is $120,910. But this salary may differ based on company and experience. For the auditor, the pay scale reports based on the average salary of an auditor entry level is $53,000.
There are three responsibilities, which is ensure that the preparation of the financial statements conform in all material respect with international accounting standards. Secondly, management has established system of internal control of the financial reporting. The last one is appropriate actions are taken by management to correct deficiencies as they are identified. Now I will explain about the auditor's responsibilities. Firstly, to express an opinion on whether the management has fairly and truthfully presented the information in the financial statements. Secondly, to collect evidence to obtain reasonable assurance that the accounts are free of material misstatement. Lastly, the independent auditor may make suggestions about the form or content of the financial statements. Let us move on to the demand for auditing. Auditing is required after the management prepared the financial statement and the shareholders or the stakeholders want to check the financial statement. Then the audit will perform the audit procedure as per GAS to prepare the audit report. Auditing will affect the information risk. Information risk reflect the possibility that the information information risk is the possibility of inaccurate financial statement. There are 4 causes of information risk. Firstly, remoteness of information. It is impossible for a decision maker to have much first-hand knowledge about the organization. The information provided by the other must be relied upon. Whenever the information is obtained from others, the likelihood of it being intentional or unintentionally misstated increases. Second is bias and motive of the provider. The information may be biased in favor of the provider. The reason could be an honest optimism about future event or an intentional emphasis designed to influence users in certain manner. For example, in lending decision in which the borrower provides financial statement to the lender, there is considerably likelihood that the borrower will bias the statement to increase the chance of obtaining a loan. The misstatement could be in the form of outright incorrect amount or inadequate or incomplete disclosure of information. Next is voluminous data. As an organization becomes larger, so does the volume of their exchange transactions. This increases the likelihood that improperly recorded information will be included in the record. Example, if a check by a large government agency in payment of supplier's invoice is overstated by 200 ringgit, there is a fairly good chance that it will not be uncovered unless the agency has instituted reasonably complex procedure to find this type of misstatement. The last cause is complex exchange transaction. Exchange transaction between organizations has become increasingly complex and more difficult to record properly. So, to reduce information risk, the audited financial statements are provided. The most common way for users to obtain reliable information is to have an independent audit performed. The audited information is then used in the decision-making process on the assumption that it is reasonably complete, accurate, and unbiased.
In auditing, there are 4 types of audit. The first one is financial statement audit. It is to determine if they given a true and fair view or fairly present the financial statements in conformity with specified criteria. As in USA, the criteria may be International Financial Reporting Standard (IFRS) or Generally Accepted Accounting Principle (GAAP). The financial statement commonly included the balance sheet, profit and loss account, and statement of cash flow, including accompanying notes to the account. In Malaysia, in-terms account and financial statement are considered synonymous, and both terms can be used in the audit report on financial statement. For the second one is operational audit. It's a review of any part of an organization's operating procedures and method for the purpose of evaluating efficiency and effectiveness. At the completion of an operational audit, recommendations to management for improving operations are normally expected. An example of an operational audit where most accountants would feel less qualified is evaluating the efficiency, accuracy, and customer satisfaction in processing the distribution of letters and packages by the company, such as Federal Express. The third one is compliance audit. It is to determine whether the auditee is following specific procedures, rules, or regulations set down by some higher authority. A compliance audit for a business organization could include determining whether accounting personnel are following the procedures prescribed by the company controller to be sure the company is complying with legal requirements. The last one is forensic audit. It is an examination and evaluation of firms or individuals' financial records to derive evidence that can be used in a court of law or legal proceeding.
There are four types of auditors. The first one is an external auditor, or they known as an independent auditor. They are usually a chartered accountant or CA. They are approved by the company auditor, and the primary responsibility of an external auditor are provide a true and fair opinion on the financial statement of the company. So, for example, if they feel like there is a fishy in the financial statement, they will give a significant opinion. If they feel like they are shitty or something wrong with the financial statement, they will give adverse opinion. The title Certified Public Accounting Firm reflects the fact that auditors who express audit opinion on financial statement must license as a chartered account. So whoever want to be an external auditor, they must have a chartered accountant license. And for example, Theo and Company, they will examine other company such as in Kuching. They will examine the financial statement of the company, whether there is correct or wrong in the financial statement. Is the internal auditor. They are employee of the organization itself who carries out an appraisal of the accounting and operation of organization. They are very considerable and depending on the employer. Some internal audit staff consist only one or two employees during routine compliances auditing, and sometimes there are also 100 and more employees to do the auditing, and they report directly to the audit committee of a board of directors. The government employee reporting to Auditor General Department, they will audit on government agency or departments only. They focus only on government, and they will include both audit on financial statement and compliances audit. Last is forensic auditor. They are known as investigators with special skill to elicit useful information from suspected wrongdoing or witnesses. They can be a part of accounting firm or internal auditor of organization.
Chartered accountant is an international accounting designation granted to accounting professionals. Chartered accountant usually focus on one specific area, such as audit and assurance, financial accounting and reporting, and management accounting. Rules on the process of becoming a chartered accountant. In Malaysia, a chartered accountant must be a member of MIA and comply to the requirements as a member. A CA must obtain a recognized degree or a professional accountancy qualifications and has at least 3 in Malaysia. For instance, the Big Four, which is Ernst & Young, Deloitte and Touch, KPMG and Pricewaterhouse consists of assurance services, which is audit and review of financial position, and non-assurance services, which includes accounting, taxation, advisory, internal auditing, and consultancy. Professional bodies in Malaysia, which is MIA and CPA. MIA is also known as Malaysian Institute of Accountants, which helps to promote and regulate professional and ethical standards, enhance competency through continuous education and training, and to inculcate a high sense of social responsibility among accountants. CPA, or also known as Certified Public Accountants Malaysia, plays a big role in advancing the theory and practice of accountancy in all its aspects, and responsible to recruit, educate, train, and assess by means of examination or otherwise a body of members. The framework of an auditor is stated in the Company Act 2016 and also in approved auditing standards such as International Standards of Auditing (ISA), Malaysian Standards of Auditing (MSA), and Audit Technical Release and other statements issued as best current practice. Auditors must comply with the approved auditing standards in conducting audit and prepare a report with positive statement to the effect that the audit has been conducted in accordance with this approved accounting standard.